morning everyone, this is Amit Pabari, founder and managing director of CR Forex. There is a lot of buzz in the market that equity market has been falling. A lot of people wanted to understand why it is falling and what is the way forward. So let me show you an interesting chart. If you see the chart, the performance of Indian equity market is relatively better as compared to other equity market across the globe. We are the least falling equity market in the world. Apart from that, there are few points which we have to understand why equity market across the globe is falling. There are two main important reasons why equity market is falling. Reason number one, rising 10-year US Treasury yield. Whenever the yield will rise, people will move money from riskier asset to safe haven. Second reason is Israel war. Because of that, people again tend to move their money from riskier asset to safe asset, because of which gold has also increased in last 1 month's time. Interestingly, if you observe the data point, in last 1 month, Indian equity market may sell off by 20,000 crore ka. But the interesting point is that we have received money from the debt market. Now let us understand one more important aspect why FII have sold heavily in last 8 to 10 days in Indian equity market. SEBI has come up with a new notification effective from 1st November 2023. Under the new notification, any FPI who is holding more than 50% of equity of any corporate, they have to give granular details about their ownership. Second notification is that any FPI individually all along with their investor group, if they are holding more than 25,000 crore ka asset under management, they also have to give detail about the ownership to SEBI. This notification has come after SEBI have faced issues to get the real ownership in Adani and Hindenburg case. Because of the new notification, we are assuming that FII have sold aggressively in last 8 to 10 trading sessions. अभी मेन पॉइंट पे आ जाते हैं, what is the outlook for Nifty in coming days? If you see the chart, Nifty has taken good support near 200-day EMA, and we are expecting that it should hold 18,800, and going forward it should move towards 19,500. Apart from Nifty, if we see other charts like Nifty Metal and PSU Nifty Index, they are also showing same kind of support, and we are expecting a bounce back in them also. Now let us discuss outlook for rupee. Fed meeting is due on 1st November 2023. There is a 95% probability that Fed is not going to increase the interest rate in coming meeting. But the important point is, what is the outlook on future interest rate? There is a 30 to 40% probability that they will sound diplomatic, saying that if the data in the US economy is coming good, then they can keep interest rate higher for longer period of time, which is dollar positive in the short run. But looking at issues like rising US debt, US shutdown issues can again come in mid of November. Third, US mortgage rate has hit 20-year high, because of which housing market can be in trouble. Because of all of these issues, we expect dollar index to not move beyond 107 kind of a level, and gradually it should move towards 102.50 kind of a level, which is positive for all emerging market currencies. Coming to rupee, the rupee is going to consolidate between 82.90 on the lower side, and 83.40 is going to act as a strong resistance for the pair as RBI is intervening. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. A lot of thin margin exporters are taking costing between 83 to 83.20 kind of a level. For them, we will suggest them that they should cover 80 to 100% of their exposure between 83.15 to 83.30 kind of a level. If anyone wants to wait, they should keep a strict stop loss of costing or 83.10, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. Between 83.15 to 83.40, if someone is covering against confirm order, they should cover 80 to 85% of their exposure. And if someone is hedging under anticipation basis, they should maintain a hedge ratio between 55 to 60%. Now let us discuss strategy for importers. The pair has been consolidating between 82.80 on the lower side and 83.30 on the higher side, where 83.30 is acting as a strong resistance for the pair. So any importer should not get panic and cover for long-term imports. Ideal strategy for them is they should cover only near-term imports. Any dip towards 83.05 to 83.10 kind of a level, they can cover 50% of their import payment which is due in next 15 days. For remaining exposure, they should keep a stop loss of 83.50 and wait. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.